Okay. So, well, let's get rolling into it, everyone. I mean, what's going on with everybody? I know we've um, got a couple of things moving. Want to get on the same page with everybody. What's going on in everyone's world right now? Bring me up to speed. I've been out of town for about a week. We were at the beach and back and forth like that. So thanks for being flexible. What's happening?
Yeah, bunch of members got some good stuff going on. I think Dustin, last time we were on here, had a property under contract, if I'm not mistaken. And then Joey, I saw your email come through about a deal that you got in the works. So whoever wants to go first, I mean, let's do it.
Yeah, bring it on.
Um, yeah, I think Nolan and I are going to get together hopefully sometime this week. It kind of went a little south for a minute there, and it kind of still is, but um, we're kind of finessing something hopefully to get it under contract, get a hold of these tenants, and that was the big block for us was they wouldn't let us get a hold of the tenants, but uh, we'll see.
Well,
There's
give
some
the
other things that
overview
we're
on
working
that,
through.
Dustin. Just give them a quick overview, just so everyone's on the same page. I mean, how you kind of got into the deal first off, and then why, number one, why we're hesitant out of the gate, what the brokers came back with, and how come, and then now how come we've changed our approach. Like, kind of give like this timeline.
Yeah, so in the
So everyone else
beginning,
can get an opinion of this. So everyone else can get like a little feel for how and why decisions are made certain ways and choices that are made. You know what I mean?
yeah, yeah, and fill me in, Nolan, if I miss anything. You're kind of caught up, but my broker brought me this deal, large building, 135,000 square foot. Um, I got a red line. I sent an LOI in for it was listed for 2.5. I sent it for 2.1. Um, you know, seller financed 35% of the deal. He gets 65% at closing. They signed, well, they accepted it, and well, there was some confusion after the acceptance. This company is out of Oregon, and they have a building in Ruston, Louisiana, the one we're trying to purchase. And so there was a broker in Ruston, and then there was another broker in Oregon, and those two brokers for the seller weren't communicating, and they thought that it was all under assumption on our end that they were okay with being in second position. And it turns out that they weren't. They thought we were bringing that 65%, of our own money to the deal and not getting it from a bank. And so that caused a little confusion there. Um, and so another,
Who should be blamed for that?
say that again.
Who is responsible for that, in your opinion?
You know, half of me wants to say my broker, but he made it very clear to them, and he was very vocal that he made it clear. I think I think the ultimate responsibility is, I guess, the seller's broker, but I don't know how my broker was communicating with both of them, if that makes sense.
Well, hang on then.
Um,
Well, then we're getting to it. So whose responsibility really is it?
I mean, at the end of the day, my broker.
Or
I mean, should I say myself?
yeah, I'm gonna look in the mirror for a second. I mean, look, I'm not like directing anything at you, of course. And I'll say this for everybody. This is not directed at you, Dustin, of course. I'm just saying in general, when there's miscommunication between your broker and their broker, we start playing telephone back and forth. What we'll discover is anytime that there's something going on and there's not like clear communication, like this is what we're offering. And if that person doesn't understand it, well, then at what point do we say, hey, broker, the guy that's representing us, you're not doing the right job. Let me do it myself. At what, um,
Yeah,
I'm just saying that I look at it from a very a point of I don't want to blame the other broker or our guy or whoever it got miscommunicated or it's in convoluted whatever. It's like we did not. Hey, John, Do they understand that we are offering this, that, and the other? Yes, they understand. And then they come back, well, they didn't understand it. Well, then guess what, buddy? You're fired because you did not portray the information that we were trying to convey over, you know? So we've had that conversation, and I really appreciated that guy, whatever his name was from last week, Savage, on the phone.
Park, Park.
Park, yeah, Savage, which I hope we all get a chance to meet. Um, but the other guy, just nice guy, but how we get across the information that's just not conveyed properly is bizarre. Especially if the guy signs an LOI ready to go under contract, but he doesn't understand the terms. That's just bizarre. Am I beside myself by, and that's why I was, for everybody to be clear, like I was on the same page with Dustin, but when he calls me back like the next day and says, hey, yeah, the sellers wanted to back out of our deal because he didn't know that he was in a second position behind the bank, although the LOI screamed all of the information. I just want to be clear that the information needs to be conveyed from our broker, but we're ultimately responsible as the investor for what we're trying to convey. Is that fair to say?
Yeah, for sure. And that's what makes me go back and forth because, my broker sent that LOI and got it signed. So I just,
That's bizarre.
it's a bizarre miscommunication that I hope never happens again. But anyway,
Well, we do
um,
just burn a little bit of trust right there because those guys like, well, what's going to happen next is after you close and you wire 2.5 million bucks. Oh, sorry, information wasn't conveyed properly. Somebody didn't do that and the other. Then it's like you're upstream without a paddle. Then it's weird. You know what I mean?
yeah,
So it
yeah,
just puts you in a weird spot.
yeah. So, I mean,
For everybody out there just listening to this, like having that direct communication and it proves even further how important having that relationship with your broker and then on top of that your attorney is. Because if you don't have the attorney on top of it solidifying it, then you don't want to have a situation where you don't have any recourse.
yeah,
So
for sure.
just a thought.
But now, where we stand now is we have an opportunity to present something, um, to get under due diligence to talk to the tenants. Nolan and I are in agreement that if we can't talk to the tenants, there's absolutely no deal. But to go in together with a deal that's with an offer that's strong, stronger than maybe what I put in, just to talk to them, and then if not, we're backing out. So, um, well, I know you're busy, Nolan, but let's, if we can, sometime this week, get together.
Sure. Yeah, 100%. Yeah,
And
we
then, I have another one. So my dad has been in this building for 15 years, and his landlord called him and said, you got to be out by December. So I'm trying to find a vacant building for him and another guy that he shares it with. So I have two tenants looking for a building. So that's kind of a neat opportunity to tell my dad where the hell's my rent every month. But
happy fun.
yeah. So we'll see how that goes. I'm hoping to have something in the pipeline before the end of the year.
Good deal. Awesome. Thanks, Dustin.
Yep.
Who else? What else is everybody working on? Who else is happening? I see Andrew on here, Joey. I know we got a couple emails. I think Joey just even shot us an email this afternoon. I got to get back to it, but um, Parker's on here, Zach, Michael. Who else is next? Who else would like to kind of get into what they're doing?
Hey, what's going on?
Ben?
I'll go real quick. I had a call with Zane last week, just a one-on-one call going over some things that I've been looking at, working on, and we were talking about a property that I went and looked at a few weeks ago here in Coleman where I live. And, everything checks the boxes as far as the physical attributes, and stuff like that. The only caveat is they do have an existing tenant, but right now they're month to month, and as soon as the building is under contract or sold, they're going to be leaving due to the fact that they're just downsizing. The tenant is. It's not owner occupied. So me and Zane talked about just, you know, I'm new to this, so my kind of putting together my first LOI. So, we talked about me just going ahead and trying to put one together with some contingencies on leasing the space, during the due diligence period. So, that's kind of what I've been working on this week. Spoke to the listing broker, yesterday. and just kind of talked to him, asked him if they had any offers on it currently, which they have not. It's been on the market for about 2 months. So I told him, I'm going to work on getting him something, and he'll operate as a transactional broker for both sides, and he said he wouldn't mind whatever I sent him putting it together and then sending it back to me to proofread before it goes to the seller. But um, I didn't know if I had time to share kind of what I had,
Yeah,
share screen what I had, and then kind of you guys want to punch some holes through it or see
sure.
if it looks right. I wouldn't mind that at all.
Let's see here. There you go. All right, I just made you the host here. So yeah, show us what you're working on, man. It's awesome.
Okay. So just make sure I get this. Can y'all see my screen?
Not yet.
No.
Okay, hang on.
There it goes.
Okay. Let me
Okay.
move.
Nice.
So this is the pro forma so far that I've got put together. 20,000 square foot building. This is what their current NOI is per month, 9750. Comes out to 585 a square foot. Looking at market rents in the area, that's probably closer to the higher side, but that's what the current tenant's paying. And the asking price, this came from the broker because it's listed as unpriced, but he told me that, from our initial meeting, they were looking to get around 1.6 is what the initial asking price was.
Mhm.
So kind of backed into it at 1.1, 10.64 cap, and the assumptions on this are 25% seller financing, 20-year amortization, 8% interest, which gives 1.41
Nice.
debt service coverage ratio. So this was kind of the highest I could probably offer at that rent, assuming I could get at least 585 a square foot or higher.
Is that what the current lease is, Andrew?
Yes,
Okay.
this current lease.
Have you got your eyes on the lease?
The current lease, no, I've not.
Get your eyes, see if you can get the broker to get your eyes on the lease. Do they have any I mean, do they have rental increases? Do they have options to renew? Like, do you have any idea about what those are?
Well, see, the tenant that's in there, they're like I said, they're downsizing their business. They're not just leaving just because the building's for sale. They're leaving because they don't need that much space anymore. It's a Beds Express is out of Birmingham is the one that leases this space. Um, so I could get a copy of the existing lease and look at that. They've been in there for a while, but they just don't have a need for that much space anymore. So that's kind of the reasoning. The tenant's leaving.
Okay.
So
Nothing
this
wrong
could
with that.
possibly be this could possibly be a vacant building by the time you buy it.
I'm going into this assuming it's vacant.
Very good. Very good.
Because I know for a fact they're leaving. I
Very
mean,
good.
they told me that clearly. So that's why, and I'll click over to it. Let's see. I kind of used, I did use one of the templates. And this is kind of what I put together just as a rough draft. Purchase price 1.1, seller to receive 825 at closing, finance 25%. There's you see the interest. This is the interest payments, and I did it on a 60-month balloon, 1% earnest, and the
Math is,
contingencies.
no way that math is right, by the way.
What's that?
Go back up for a second. 13,000. Oh, I'm sorry. Oh, I'm sorry. I'm sorry. No, you're correct. I apologize. I thought it was
13,000 a
13,000
year.
a month. I was like, wait a minute. I thought it was 68,000 a year. I apologize.
Yeah,
Sorry. I
yeah,
misread it.
68,000 for 5 years. I could
Apologize.
spell that out a little bit clearer than that. But here's my contingencies. This is really what's going to be important to making sure that both sides are really just protected. So I did a 60-day due diligence period. I don't know if that's long, short, or probably longer than average, but that way they could, any point during this time they could it gives me enough time to basically market the space. Um, triple net lease. It's contingent on getting one of those with a 585 per square foot or more, and I did it for 60 months as well. Um, Giving the seller the ability to take other offers during that period. Um, you know, and also a clause in there that will return earnest money if either I do not get the space leased out, um, or any
Hey,
other
Andrew,
reason
go
that
go back to your pro forma real quick, if you don't mind.
okay.
Did you go over to your vacant offer tab right there? Did you run the numbers on this one?
I did, but I have questions on if this how to fill this out because I don't remember seeing it in any of the trainings.
The reason I ask is um okay, is the building 20,000 square feet?
Yes,
All right, we need to do the math on this. Maybe we need to update this somehow. Zay, maybe you and I need to get together on this. 20,000 feet times zero point 0.5. I mean, that's just like 12. Because that should create a value. Like the intrinsic value is not right on that.
so what should the market cap rate be, or is that can I even
No, the
change?
market cap rate's correct. The intrinsic value is incorrect. So maybe we need to clean this up. So like just to be clear, so like for everybody that's on here real quick, just run these numbers with me, just so I'm on the same page. So if there's 20,000 feet, like whip your calculator out just with me, just so I'm not like crazy. So 20,000 feet times 5.5, which is 5.5 bucks a foot. That's $110,000. Are we on the same page on that?
Yep.
Divide that by 0.08. That makes a market value of what, 1.375 million?
Yes.
Y'all follow that? So somehow, I'm not blaming Zane. I'm trying to figure this out because maybe my calculator might be incorrect too.
And then you
But
take 70% of that. That's kind of like your offer price almost.
yeah, so the intrinsic value is incorrect. So we need to update this, or I'm not even blaming you, Andrew, either, but there's something, your calculator is incorrect. So you're getting bad information. You're getting bad.
Hey, I may have screwed it up somehow. I don't know.
Andrew, could you click the
Yeah,
699 right
click
there?
on that, click on that just to get a.
Oh, you
It's
just
not even a formula. It's not even a formula. Okay.
yeah.
All right, that makes me feel better then. I was like, there's just no way this is correct. Yeah.
So apparently you weren't supposed to change that part.
Yeah, that was not a variable.
I don't
So
think
Maybe
I've changed it. I don't know why it would have been on 699, but oh well.
maybe
well,
that
no big deal. No big deal. The kicker is though is that will throw off a different way for you to offer on properties if you don't know the true value of the building when it's leased, you know? So
And
if you want to jump in there, just type that into $1.375 million or one three. Yeah, there you go. There you go. Now see now we're talking. Now you got like a different valuation of the actual value of the building. So if you know that it's 20,000 feet, the market rent's 550 a foot, you go and thank you, Matthew, for dropping that in the for those that are following. If you look at the comments, Matthew just dropped in like the actual code for that. Thank you for doing that.
well the performa and the updated master performa has the right formula in there. So I
Yeah, the
guess
updated, everything on the updated. By the way, we've updated. We'll talk about this later, but we've updated the pro forma, the new one that we'll share out tomorrow. It's got all of the big, beautiful bill, all that kind of stuff. Doesn't matter left, right, or indifferent. Like it's got all the updates for the depreciation schedules. It's got all that stuff on the pro forma, and it's the most updated one that we have. So we'll share that with you guys tomorrow on that. But it's all updated. Um, but to be clear, that intrinsic value is what the building will be appraised for in the future. Now, that market cap rate of 8%, that might, I might want to run that if I were you, Andrew. I might want to run that at like 8.5. I just got an appraisal done last week at 8.5%. So, not that I'm higher and mighty or better or worse, but 8.5 to me feels right.
Yeah.
And so you can go, so just to be clear, so you can figure this out, Andrew, if you want to go back to your assumptions page, and then if you go down, scroll down a little bit to your, keep going. Where is it? A little up higher. Sorry. A little bit higher. Keep going. I'm sorry. Well, you might have changed that number too. If you go back to the vacant offer. Did you change the 8% number, market cap rate number? Click on that
There's a good
cell.
chance. I
Okay,
should
yeah,
do
you did. I
that.
was gonna say that was all formulated out in the past, but that's okay. But if you type in like 8.5%, I feel like that number is a good appraised value based on where interest rates are.
Yeah,
So
and
that
I'll have to
might
fix the
change
formula.
that might just change interest rates a little bit, which um yeah, there you go. Um either way though, yeah, there you go. It's better now at that point. So what that does essentially gives you a better opportunity to know what you can offer on. And remember, the reason we offer that 70% of the intrinsic value is because then if you're underneath that price point, when you go back to refinance the building, especially if you have the seller leave money in the deal, you can refinance your equity and the seller's second position lien out of the building and still own it with 100% ownership. So that's why we're kind of like making that. And like you guys were mentioning, the building will be vacant. You notice that last line item of leasing commissions? Like that's a big piece that some people don't account for. And not that it's a huge deal, you can come out of pocket for it, but damn, if you can use the bank's money to pay leasing commissions versus yours, you're going to be in a better spot. You know
Yeah,
that.
that's assuming I use a leasing agent.
Right. You can lease it yourself, right? I mean, I do that all. I mean, I put stuff on Facebook Marketplace all the time myself, and I get a ton of leads. We just get a bunch of tire kickers, but
Yeah,
that's that's
yeah, cool.
that's half the battle.
So on the tiered offer part, do I just put in like some options, or what do I change on this on the bottom part, the blue stuff? Because I changed both of them, just playing around with it.
Oh yeah, you're supposed to just change the blue on that one, but that kind of goes into the contingencies too. So like, you know how you said if you get it leased up for 550 or whatever per square foot,
Yeah, 585.
or yeah, 585, you could also put tiers, you know, you can say, okay, if we get it leased up for 585, we can do this. You know, we'll buy it at this amount, get it for $6, we can buy it for this amount, etc. You know, so like that's just to help you create or build out that offer more. But um, that's if you want to like make it a little more confusing maybe and show different offers that you would buy it at or different price points that you would buy it at, depending on what you get at least for, of course. You see
Yeah,
what I'm saying?
yeah, I
That's a
do.
little further down the road, honestly, in my book. Like the tiered offer is a little not convoluted or confusing. It's just in my book, the name of the game is understanding what the value is, discovering what amount of money you can knock off that intrinsic value, and then making that aggressive offer based on what you know as the true value. Does that make
So
Well,
sense?
yeah, it does. So looking at the this 70% of intrinsic value, that would be probably a better starting point than
Yes.
what I currently had, and that's assuming I lease it at I had 585, but would I change that to 550 at least as a minimum with at that price point, or leave it at 585 on the contingency?
I mean, maybe go to 585 if that's what it's trading. Maybe the real market rent is 650 a foot, but maybe just go at what you know. The truth is for everybody knowing this is that if you got a guy that's like, oh, I want to get 1,600,000 on this building, right? Like that's what he was asking, and you're offering 1,100,000, which is on paper a 10.5% cap rate, right? That feels strong,
Mm-hmm.
but like for everyone knowing, like feeling like there's massive risk in this. The guy's about to leave. You're about to buy a vacant warehouse. Now, that's not a bad thing, but if you're going to purchase a vacant warehouse, you need to be compensated accordingly. If you're going to take on the risk of vacancy, you need to purchase at a vacant price, right? Like you can't buy it at a 7.5 cap rate of what he's offering if the building will be vacant in 6 months. Like, that's not fair to you. You know what I mean? If you need to be compensated for the risk that you're taking on. Now,
Well,
if there was a 20-year net lease in there, then it'd be different, right? You can buy that 7.5 cap, but
Yep.
go and buy something that's with 6 months left on a lease. I highly, highly recommend not buying anything that has that short of a runway at a cap rate. Like the vacant offer calculator at that point is your best friend. You know what I mean?
and one thing to note, though, I think to clarify is Nolan separates the 70% of intrinsic value offer and the contingency offer, right? So like I believe Nolan, if I'm not mistaken, you're just saying like make the 70% of intrinsic value to take the risk,
Right.
whereas the contingency offer is a different type of offer. You know, you're specifically not taking any risk in that case. You know, you just
Okay.
get it under contract to lease it up. So you could combine both of them if you wanted to, but I think Nolan, what Andrew, is doing is trying to avoid the risk of buying it vacant in the first place,
Yeah.
but with the contingent offer at a price that's more reasonable than just a vacant offer, you
I
know?
understand. I understand. And there's nothing wrong with that. And I agree with Zane. I agree with you, Andrew. I'm thinking if that's the case, if you can buy a building without the risk of a vacancy, well, then you can afford to buy it at a cap rate, at a rate of return. But if the building has the opportunity to go vacant, you need to be compensated for taking that risk. Is that fair to say?
Yeah.
Okay.
Makes sense.
So
Could
just
I input there if you don't
yes,
mind?
please, Dustin, bring it.
Um, yeah, Andrew, I'm new to this as well, so take it with a grain of salt. But if 1.1 is your max number, I wouldn't send your first offer at that. Leave yourself a little bit of negotiation room. I'd go in at probably high 800s, low 900s, and let yourself and see. The worst thing they could say is no.
Right.
And the 60-day due diligence for finding a new tenant. You know, Nolan and I were kind of looking at that with this building that him and I are dealing with. We thought the tenants probably were going to leave in 18 months, and we were saying, well, what if we have a tenant locked up now, but in 18 months he's already somewhere else. So there's that caveat that you have to weigh of like, hey, what if you find a tenant, but the current tenants aren't moving out for 6 months? This new guy's not going to wait 6 months to move in. He's ready to move in now.
Right.
So I would offer low. They obviously have this priced as it's occupied, and that's just simply not the case. So
Dane, what would you call this seller?
I'm assuming you want to say unmotivated.
Unmotivated. That's how it feels right now. Unmotivated. I'm
Well,
not
let's see
saying
how
that's right or
motivated we
wrong.
are.
You just took the words out of my mouth, and I'm not saying it's right or wrong. But when you got a guy that's pricing a building with 6 months left on a lease and he's chopping it at a 6.5 or a 7 cap, tell that guy to kick rocks unless he actually wants to come and negotiate. You know,
Right. Well,
but
we'll see when
also
he gets
too,
an
there's nothing
offer.
wrong with making an offer. What I
Yeah.
would do too, Andrew, is I would recommend this. While let's say you get this deal yesterday, or let's say you're under contract, like the guy or the guy agrees your LOI, maybe not in Dustin's sense where the guy didn't read it. So that's neither we'll have
yeah,
to
make sure he reads it. Yeah,
maybe have that guy omit that one.
yeah,
What I would do is I would spend my time over the next 2 weeks, and we know you and I can talk about this. I'd spend my time meeting with bankers. I would spend my time literally going and getting an idea of what their appetite is, what they're trying to, and like I said before, call up your brokers, ask for a recommendation, ask for an introduction, go to lunch. They'll buy you lunch, go to get a beer or coffee or whatever. Send them your financial statement, your personal financial statement, your tax returns, whether they are strong or they're weak. You're getting them the information that they need in order to make a decision on you as the borrower, right?
Right.
It allows you to be more agile when the opportunity, whether it's this one or the next one or the next one, comes up. Or most importantly, they know you at that point. They got a name with the face. And then you say, hey, I got this guy, this Nolan guy. I got this Joey, this Dustin, whoever it is on our deal. I got this other guy. They've gotten to know you over the last 2 months. And they're like, dude, I really like this guy. He underwrites deals strongly. If he's bringing on another partner, this guy must have some aptitude. He must have like an idea of what he's doing. It just elevates your ability to get a term sheet versus like dancing around underwriting deals on a pro forma and not building a relationship. Does
Yeah.
everyone like feel that, like what I'm talking about? Someone get an idea on that? Zane, you have an opinion on that?
No, I totally agree. I mean, the bankers are definitely going to be a lot more receptive if they already know you, of course.
Yes.
I totally agree. And Andrew, on this particular deal, I mean, although it seems like he may not be motivated, there hasn't been another offer, apparently, according to these guys. I definitely wouldn't say it would hurt to make the offer, of course.
Yeah.
So, like, that's just my opinion. And then we also have Joey over here. If we can move on here
Yeah, let's
to
move on.
Appreciate
and
it, guys.
yeah,
Yeah,
for
man.
sure.
Thank you, Andrew, for sharing that, brother. It's awesome.
Well, to just piggyback on the whole banking thing, I had a conversation. First time I've talked to a banker today, and it didn't go real smooth. I guess one of my biggest hangups is, you know, if I don't have the money, the down payment, I know we've talked about, when you first start dealing with the bank, try to keep the deal as normal as possible. But if I don't have the money to cover the down payment, what should be my response when they're like asking me how much I have to put down on a property? If it's like a $2 million property, and I'm going to need help with it from somebody in the group.
Right. So the way that I have that when I first did it and when I first got rolling, right, the seller had, offered me to leave money in the deal, right? So I wasn't like I didn't come up with that idea. Again, then I sat with my accountant and was like, is this a thing? Is this actually how it works? And he's like, oh, it's a tax play, whatever. What I would do next, very simply, is say, look, I am not the asset on here. You explain to the banker, which again, believe this or not, the bankers are smart guys. They have to go and underwrite the deal, take it to their loan committee. But let me say something. The bankers are salary guys. If I have a banker on here, sorry, but the bankers are salary guys. They are not commercial real estate mavericks. We're mavericks here. And I'm not trying to be like, silly, but I'm telling you, like they envy us. They envy guys that are going and taking risks. They are risk mitigators. Like we are risk takers by choice. So think about it this way. Our job as investors is to prove to them why this risk is a good investment. So what I mean is when you go sit there with that banker and they say, oh, you don't have this, that, and the other, and they're trying to be up on their high and mighty leather couch, and maybe out of the gate you're developing a relationship, like it takes time to do that for them to get to know you, of course, Joey. But what I've discovered is if you can shift the risk from you as the borrower to the tenant, that's where you get the money, right? If you give the tenant or you give the banker what they want, which is a
Mhm.
strong lease, a long lease, a strong credit tenant, maybe it doesn't have to be a credit tenant, because right now out of the gate, they're trying to find collateral to attach their money to. If you really think about it, like
Right.
they gotta lend money. All of us know this. Like they have to lend money. So they got to find something to attach collateral. Like they'll give you the money in exchange for something. Right now, Joey, you don't have anything. You don't have anything to exchange. But when you find that deal, when you find that property, they're willing to exchange a great lease, a great tenant, whether it's a credit tenant, but most importantly, a building to exchange for that loan. So if you can shift the risk from you, the borrower, over to the tenant, the lease, the strength of the tenant, you become just the conduit. Does that make sense? Like you're
Uh,
literally just a conduit to the
yep.
bank earning interest. That's what they're trying to do. So if you can create a salesmanship and say, look, John, banker guy, look, totally agree. I'm actually not disagreeing with you. This is my first rodeo. I've run with a bunch of guys that are doing deals. I got a guy that does this, that, and the other. And you have this oozing confidence, not in an arrogant sense, but just a matter of fact way. Hey, bud, I
Mhm.
got like 5 or 6 guys that I run with that are doing deals like this. And I'm basically making you an offer. Instead of it's deny, deny, counter accuse. Like, hey, buddy, you think that you can do this, that, and the other. Well, guess what? I got 8 other guys that I'm trying to call. I'm trying to give you a shot, cowboy. And
Right.
not douchey sense, but just like, look, I'm doing these deals. You either going to send me a term sheet on this deal or you don't. You can either leave money on the table or you can't. And you have this kind of matter
Right.
of fact. this is the deal, this is the tenant, this is the building that you can have collateral. I'm offering you this building as collateral in exchange for a mortgage. Take it or leave it.
Okay.
I'm gonna go to your competitor. You know, and when you have this kind of confidence, which look, I haven't just like came up with this overnight, right? I've like accumulated this over like kind of some time of confidence and vocabulary. But you practice that, especially as you're driving home or whatever, you're talking to yourself. You'll create this. You'll create the confidence, and then when you go to the next guy, the banker like that, it will come off. It will just roll off your tongue, and the confidence will just amount over time. Does that make sense?
Yeah, sounds good. Thank you.
Love it. Awesome. Sweet.
And not only that though, Joey, like to specifically answer that one question about like the investors, like you can tell them that you have private money investors and you have millions of dollars that are verbally agreed to, ready to go on a given deal. I mean, and they may ask for those people's like financials or like proof of funds that they actually have that, but you're not gonna go and ask them to take a screenshot of their bank account to like prove it to you. So like
Right.
you can confidently say that you have investors that are ready to back your deal. And you guys will get there when you get there, but you just wanted to shake hands and get to know each other so that when that time comes, we kind of can get that part out of the way and start getting down to business.
Yeah.
All right. Appreciate it.
That's it. That's it. Yeah, I would never share anybody's info. Like if I'm you, I wouldn't share like my partner's information. I wouldn't share, who you're running with. I'm just, it's very matter of fact. It's very confident in what you're doing, and it takes a little bit of time to kind of develop that like aurora of like not everybody look at me, but just like this is my town. I'm gonna do what I'm gonna do, and if you don't want to do it, no problem. I'm gonna go to your competitor, and he's gonna win. You're gonna lose. And it takes a little bit of like confidence out of the gate, but once you do it once or twice and the bankers will call you back, that's when you know you've got them on the hook. And then you can say, well, I'll get back to you, cowboy. I'll let you know and things like that. And then they're buying you lunch, and then things will move forward from there. I'm telling you, it only happens once. You do one deal like that, and they felt like they messed out on because another bank did the deal because of what you offered them out of the gate, and they said no, and then another bank did it. They're immediately going to be like, well, shit, what did I miss? Like, damn, that was a commission that I missed out on. That was interest that we missed out on. And then they're going to be calling you. It's radical. It will happen. It's inevitable. I promise. It's crazy.
Looking forward to it.
Awesome. Love it, dude. Everyone, look, I hate to be this guy. I'm happy to stay on with everyone, but I got to get home. It's got a little family thing this evening, and if I'm going to be very transparent with everybody, 4 years ago my wife and I had a baby that was supposed to be born. Her name was Marlo Myra, and she was born still at 39 weeks, and that was 4 years ago. So on July 8th of 2021. So we're gonna go and just spend a little time tonight together, and yeah, it brings me some emotion sometimes thinking about it. But yeah, that happened 4 years ago today. I hope it never happens to anybody because I can vividly remember how it made me feel and how my wife feels. So we've got more babies and the whole thing, but that's why I got to cut this evening short. So I appreciate everybody being on this evening, and everyone knows my cell phone. Everyone's got it, Zane's, everything like that. If you could, please text us and call us with the next deals, email us, everything like that, and we can all kind of chop it up and go from there. Is that good?
Yes, sir.
Sounds
Awesome.
good. Thanks.
All right, everybody. Thanks so much for making it. We'll see you guys on the next week, okay?
Appreciate it.
Thanks, everybody. See you.